Good morning, all, and there is the bell. Happy Tuesday. Good to be back with you. Mike Fairboard here for Trading Futures, sitting in for Mr. Ben Watson, who's out, but Ben should be back in next week, folks. Looking at the markets quite a bit the last few days here, and this morning, excited to take a look at and to see what we've got on a short-term basis happening with some of the futures contracts. For sure, we want to look too at the possibility of maybe even a short-term rotation back into some of the precious metals. Some of those are setting up. They do look a little bit interesting, and so do some of the small cap stocks. So I'll look forward to getting into that with you, folks. I'm joined in the chat by a good friend and colleague of mine. Great to have him back with us, Mr. John McNichol. You see him in the chat as JM, very knowledgeable in futures. It is a privilege to have him here with us today, helping out in the chat. Folks, you can follow us both too on X, John McNichol CS. You've got to put the CS at the end. Mike Fairborn CS, good to have, love to have you if you're able to join us there. Hello to you, Ricebird. We've got Ellie, Gary, Wiley. We've got Kevin, Paul, Randy, Sharon, Frank, Beth, and many others. Joe. Hello to you, Joe, as well. Janelle. Hello to you, Janelle. She's sharing some love this morning. Fantastic. Great to see you. As well as BJ, folks. Well, with that, let's go ahead and dive on into it today, folks. Any questions, comments, definitely throw those in the chat. But starting off with some of the disclosures here to get going, we've got, so futures and futures options trading does involve substantial risk. It's not suitable for all investors. Futures accounts are not protected by the SIPC. Please be mindful of additional points listed here on this slide. Charles Schwab Futures and Forex LLC is a CFTC registered futures commission merchant and NFA Forex dealer member. Some additional points listed here. Virtual currency derivatives trading involves unique and significant risks. That as it relates to Bitcoin, the information here is for general information purposes only. The paper money software application is for educational purposes only as well. Last but not least, just a quick note here, investing does involve risk, including for some products more than your initial investment. It also states here the stop orders are not guaranteed in execution due to exchange rules based on certain conditions at the time of activation. The exchange may reject or substitute an exchange designated limit order for the originally triggered market order. So with that, let's get sharing our screens here. I was looking at gold. I'm going to start off though first looking at the ES as it stands right here. A big bounce on the ES, a continuation of strength. You know, today we're down a little bit, about 17 points right now. You can see the NASDAQ down a little bit more. And I always like to look at these percentages over here. Just give me a general feel of how things are looking. Now, generally, folks, too, just keep this in mind. I'll bring this up every once in a while because I think it's an important point. But if you can look at the first 30 minutes of the trading day, some traders, and I've read this about institutional investors as well, that do use futures contracts, if you can get past the first 30 minutes, and for me, that's going to be at 8 a.m. For you, it's just 30 minutes from now, roughly, right? Top of the hour, what we're looking at. Once you get past the first 30 minutes, sometimes how the chart looks, if you are up on the day, if you are seeing a shorter term upward trend, a lot of times traders will say by the end of the day, they anticipate prices being up on the day. Or what they'll do is they'll take that first 30 minutes of the day, the high and the low, okay? And they'll say, if I break above that level of the first 30-minute high, we might end up on the day. So that is a way to trade short term. I want to kind of plant that seed early because I'm going to tie that in real quick here in just a second. All right, but that's really, really useful to do. I wanted to bring that up on the Thinkorswim platform because you can look at the percentages right here too. Very helpful to see what is leading and what is not leading. Some quick notes here as we look at the ES as well. Jumping back over here on a weekly chart, we did have a big bounce off of this point, coming right off prior highs. And the markets and sectors class that I do teach, we looked at this about 2.5 months ago as a possible bounce level. Just using our Fibonacci off the bottom to the high, we got a very important level that came in right at the 50% mark. Right there, we came down, we bounced and really tested that level, and we've done some really positive things ever since. In fact, we've spiked back up, clearing actually on a daily chart now above the 61.8 level. which is a level that a lot of traders will look for. I'm going to get back to the daily chart here. They might say, hey, if I'm able to break above the 61.8 level, many of them will say this, on the recovery bounce back. You notice we're now on a daily chart here looking at the fibs, but just to bounce right there, getting above the 61.8, which was an interesting level, some prior resistance points. Notice what we did. We actually broke higher from there, but traders will say, hey, if I get above here, it's more likely than not that the trend, the upward trend, could continue, as opposed to not getting above the 61.8 and then fading and coming back down. Does that make sense? You can use these kind of techniques to, on, let's say, your daily, on your charts, your stock charts, for example. It's not a stock trading class, but you can use them in other ways as well. We're just talking about the fibs right now and getting above some of these key levels. But a lot of times, like I said, in the minds of a lot of traders, that means that they'll say that means a shift more to the upside. So even though we could see a pullback here, it may in fact continue on up. That's a strong trend right here. We do see another sign over here too. I'm going to go ahead and just maximize this so we can see a little bit easier. But notice over here on our money flow, something that we do not get on the SPX. We get it on the ES, and that is volume. And notice we did not get a big spike in volume over here, at least not relative to this sell-off. Huge volume over here, right? To this low point that was reached. That was the longer term 50%, weekly 50% fib level that we bounced right off of, and prior highs as well. But you'll notice that you get some of these moves over here that can continue. I'm going to draw a line through here so you can kind of see this. Were we ever above that level or near that level on some of these big upward moves in terms of volume? Answer to that is absolutely we were. And money flow, which is so fascinating, is it looks at accumulation of buying versus selling pressure. Look where that line's taken us, all the way up to this 145 level. Look right over here. If I draw a line through 145, wow, we're almost at highs right now. Yet, price-wise, if we take a look at price over here, where were we over here? We're above it. So basically what I'm getting at is the volume, the amount of buy volume compared to what the money flow is telling us. Buy volume relative to sell volume has been very strong here. And a lot of times when this happens, we might not get there right away, but according to the money flow, we should take out this level. That's the question. Will we do it? I think a lot of it could tie into tariffs as well. Will we see tariffs and what happens with tariffs there? If we see better tariff negotiations across a broad range of countries, and a lot of expectations are as we start to sign a few of those, other countries are going to want to jump on board quick as well. They want to be left behind. We could see news that could help us, but that's the big thing. It's all about news flow right now as well. So you'd want to tie that in together, but maybe some of the smart money is buying in here. I just say smart money because a lot of times this is referred to as a smart money indicator. It is showing strength and above prior highs. So we shall see. But wanted to hit that. Few interesting developments. And I'm just mentioning this to you so you can kind of get a general sense of maybe a long-term perspective if you want to keep looking at the ES on a bullish time frame, or I should say on a bullish perspective as opposed to bearish. It could be helpful. All right, well, let's go back over here. Let's look at some of the others. This is the NQ. Notice that the NQ, the ES both cleared the prior high right around that 61% level. That is showing strength. We're seeing some strength coming back clearly in some of these tech stocks. Let's go into the YM. Now, what do you see here? A little bit different story. Not as strong. In fact, this is the prior high right there. We did not get above it on our YM. So it was a good recovery off the bottom, but not as strong as the ES or the NQ, the NASDAQ or the S&P 500. Now, looking over here, look at the Russell. The Russell, it's kind of the same. It's right back to the prior high. Hasn't done much. I will say something interesting about the Russell is it is creating an interesting sort of formation here. Looking at stocks that would make up the Russell 2000. There's a lot of small cap stocks in here. Roughly, folks, 2,000. They call it the 2,000. There's a lot of smaller stocks in here. But look at this, you're flagging right at resistance here. Now, a lot of times if you hold that level, this could be a positive. As we run up here and we're kind of going flat. We're holding all this ground, aren't we? We didn't just bounce and fall right back off that point. This could be interesting for the possibility of a bounce as well. I bring this up because what I want to do next is go jump right into our futures overview right here. And we'll go full screen and take a look at this. All right, so this is where we're at today. Now, we're still currently holding above the center pivot point. These are pivot points that I put on. You can add these on as an indicator, just in the same place that you might always do that. We have zoomed back down though. This is a 5-minute chart. We're looking just at the last 1 day's worth of data. So we normally just do trade shorter term in this class, right? That shorter term intraday type trading. So looking at this right now, you can see that we are above the center pivot point on all of these right now as it stands. And we had a little bit of an indication here of possible support that came in, right? Looks like as soon as I said that, the NQ might be testing that level right now, but it's all bullish right now until, you start to break down. If we're using this center pivot as a long-term kind of a guide, or I should say it's a guide for the day. It's very, very short-term in nature, but it is for the day. All right. The last thing we talked about was the RTY. Remember the RTY? It was going flat, kind of like a flag pattern. Look what's happening intraday on a 5-minute chart. Now, we don't know what will happen here. We have to wait and see. But this is a rounded, it's like a cup and handle. It's pulling back pretty sharp right now. So will it pull back or not? That's an interesting question. But that flag that we saw on the daily could start off actually with a 5-minute chart out of a cup and handle if it decides to go to the upside. Now, the key point that I spoke about earlier, remember the first 30 minutes of the day? This is where it becomes really, really interesting. The first 30 minutes of the day, you can look at some of the patterns that might be setting up. What I mentioned is we take the first 30 minutes. We'll use the RTY as an example. This is really going to be a cool technique that you guys can use to maybe get on the right side of the trend, the daily trend. And when I say daily, I'm talking daily, like intraday trend for the day. How to stay bullish, how to stay bearish. Take the first 30 minutes. Here is our 7:30 mark. Sorry, I'm using mountain time. That's where I'm at, but that's basically where the market opened up for each of us right there. So what we do, that's our starting point here. We'll also take it to 8 o'clock, which is right here. And whatever the high and low is over that time frame, right now, this is the current low, right, that we've seen. And the current high is actually right there. It's not this high bar. It's over that time frame of 30 minutes. And do we break above it? Or do we break below it after it's formed? We don't have it formed just yet, okay? We will at 8 o'clock here, my time, in the next about 15 minutes. We'll know, and then what we can see is if it starts to break above that level. It still has a ways to go. That's a pretty big dip pullback on that RTY. All right, but that could be setting up here, and we'll look at some of the pivot points here just momentarily. The very first thing that I started talking to you guys about, though, was the possibility of a rotation back into some of the precious metals, which had been so strong for a while. Let's go back into it. I'm going to pull it up right now. Here is gold. That's your weekly gold. So much, much stronger than the markets this year for sure as we've run up. But if we take a look at the daily chart here, you see how we're just barely starting to kind of bounce. We're kind of holding, and we've got a little bit of this, one of these zigzags that's come down off the top. Or you dip down here, you take the same price range, you dip down here, it lines up really, really well. That could be, that's kind of sort of a standard sort of retracement that you might see in the markets. In fact, you can see one happening over here as well. You see these zigzags that do occur. It'll pull back down, pop back up, and come back down again. Very, very common for a long-term move, potentially. Let's put it this way. It's a pullback, a counter pullback into the direction, counter of the longer-term trend. This being the longer-term trend, counter pullback Do we start to break higher here? That's the question. Okay. Is there a rotation? Has the ES and these other um, market sector indices started to just maybe top off a little bit? Notice over here with me that we do have a lot of resistance right through there. It was prior support. It's a big round number too. I can't tell you how many times I've seen these big round numbers, prices bounce off there. We don't have to look too much further. That is 6,000. You can't really see it that well. When was the last time we bounced off a big number? Right there. There's your 5,000. That was a big recovery too. So we're right at that level. Could we dip back down and maybe hold support at prior highs or lows right through there? Some support along those lines? Possibly. Um, to do this though, I did want to take a look at just the volume profile real quick to see what we're doing. This is the beauty of having volume on a market. You only get that with the futures. You do not get that with the SPX. I'm going to change the volume profile here to a value area percent of 10. All this is going to show is where the top 10% of volume came in at price. I'll explain this here in just a second, but you can see up top here, we are hitting some of these major spikes. Where we see these major spike levels at, I mean, that was a big level right there. That actually is the point of control. That is where the majority of volume came in at. All this volume, when we look at it, what prices were they buying at or selling at? These were the prices right there. And if you're above it, it can mean support. If you're below it, it can mean resistance. Look at these spikes that are coming in right here and right here for the full year. So in other words, there was a lot of trading coming through here. You don't always see it, but it can help to give us, or it could help to solidify possibly our concept, what we might be seeing in terms of potential resistance that could come up there, because there is quite a bit of volume and just above that as well. Okay, so I would say the two biggest points are basically this level that we kind of broke above right here and where we're trading at right now. And there could be resistance. And if that's the case, maybe there will be a rotation back into gold. By the way, a quick note, notice how volume sort of wanes over here, just dips into the little trough. If we did start to pull back here, that could mean that we could fall back a little bit quicker here. There's less resistance, less buying and selling, buyers and sellers that have bought at these levels. And so we could dip back to maybe the next volume node, which comes in, right near that level that we've been looking at, around that level. So there could be a rotation in here, and that could mean a lot to us because we are looking at those short-term trades. Okay. Before we start looking at that and breaking it down into the pivot point, I'm just going to take a quick look here. We are looking at pivots right now. Yeah, so Shri in the chat, you read my mind. That's where we were heading. We're just setting it up here near our first 30-minute mark of the market being open, and we'll go from there. All right, perfect. Oh, and John's got that. Excellent. All right, let's go down here. John's got that one for you, Beth. I'm going to zoom on down now and jump right into pivots. Okay, so let's look and see what we've got here. The possibility, now that we looked at the daily chart, got that under our belt, have in mind the possibility of a 30-minute coming up, and we want to mark that level as well. But here is the center pivot point. And remember, we take trades. We could take trades to the downside. We could take trades to the upside. So it's the biggest level of consideration because we don't have the trend really yet in place. If we're right at the center pivot point, we might bounce because there's support, might bounce to the upside. We might drift lower. It's that these support 1 levels and support 2. And that's a really wide range in here for that pivot point. But this is where the trend, we've got that short-term trend in our favor. And this is where we just take trades to the downside here, right? Those are just downside trades. Of course, on the upside, when you get to the resistance 1 and the resistance 2, this is where we take trades up only, right? We just take up trades, or bullish trades, I should say. That's the better term, bullish trades. Let's look at a few of these right now, just to see what we've got before I move into the gold. So the NQ is moving a little bit lower. It is breaking that level. The YM is here, bouncing off of that center pivot. and the RTY dipped all the way back down. Okay, so that's looking less and less like a rounded, sort of a cup and handle or a rounded bottom if you're breaking lower. And this could all tie back into the rotation that we've talked about big picture. Okay, so let's look at gold then. Well, actually, I'll look at oil here first. Oil has been very, very active. You can see all of that activity around that center pivot point as well, dipping lower. A quick note on oil. We did not look at the daily chart. Let me just do that very, very quick here with oil. We'll just click on it. There we go. Okay, so here is oil. Oil's been down, lower lows, lower highs. It might be actually sort of in this contracting phase. You can see a little bit of a triangle pattern maybe forming here, which means that if it does, it might dip down a little bit lower in here too. We don't know. We'll have to wait and see on it. I'm going to jump back now. I just want to get a reference point as I go back to the pivots, hit this oil, and it should just show you here how might this be traded if in fact we were taking a trade to the downside, and it would look something like this. We broke lower here. If we come back up and hit this level or come within a couple of ticks of that point, what some traders might do is they might put on a trade, a downside trade there, and sort of trade that on down would be one thing. Oops, sorry, one thing to look at there. What I click, there we go. All right, so that is a consideration too, to look at that. Sorry, hit the wrong ones there. Remember one quick thing too, if we ever did go, short the market, there is unlimited risk to the upside. You always want to remember that too, right? If you're stuck in a trade, you can't get out. It just, because prices can keep going higher and higher on these contracts. So just always keep that in mind as well, folks. But here we go. As we look at this, you can see prices coming down here. But like, for example, this might give us a little bit more indication because it is the center pivot point. We've broken down. If we touch off that level, then we could look for a target at the S1. So, that's something that you could keep an eye on today. If we were thinking there could be a larger, contraction within that, what we saw is kind of that triangle formation on the daily chart. We're kind of piecing these two together. But let's look at gold right now. Gold's totally different. Gold is on the upside. This is really one of the things I wanted to focus in on today. If we do see that rotation, what we could get are prices within gold actually going above that R1 level. And if we get a move that's just at least a 2 ticks above the R1, then we would take the trade to R2. If these are really wide, sometimes traders will take the 50% level. I just kind of eyeballed it there. I don't know exactly where that's at, but just they might take the trade off there or a portion there. So let's look and see if we can get a trade on gold today if the markets do fail. It's going to be interesting to see right at about 7 minutes away from our 30-minute mark. Generally, traders will use that 30-minute mark, by the way, because they're trying to it lets the market settle, and then sometimes that's when the trend direction on the day can occur. It gets past all that economic news that could be influencing prices one way or the other. When you get past 30, that might be kind of baked in, and then that's when you get your trend breaking higher or lower out of that 30-minute range. Okay. One quick note on gold too, as we look at it short term, very short term, 5-minute chart. Look over here with me. Prior highs right there. All right. One note on gold too. Always be mindful when you come over here. Look at the contract itself. Let's go full screen over here. And as you look at gold, come in here and look at the. I didn't mean to click there. Right here, this drop down. I'm going to click under futures. Now I've got gold highlighted. Be mindful. This is a great place to go just to know what one tick size equals in terms of the tick value. So a tick is basically like 0.1 or a dime. You can look at it that way. You can see up top here, it'll be trading. That's the minimum trade it could make. And you can see like the spread there is about 20 cents. It's holding, but it could be, that's the minimum tick. So from bid to ask, it's moving about $20 per one contract, folks. And that is up or down, up or down. There's your margin requirement. One thing I wanted to note on gold is we can, sort of reduce the size of this tick value like to a tenth by putting in, we do have a micro contract here, which I wanted to look at today, which is just /MGC. Let's click on MGC. I'll pull this down. You're going to notice it's not $10. It makes it a little bit more doable in terms of, well, not doable necessarily, but just volatile, I guess is the right word. It minimizes that, the amount is probably the best way to say it. The tick size is still a dime, but look at that. Instead of $10, it's a tenth. It's $1. Meaning that we could also use some money management here too. If somebody wanted to buy a little bit more here, let's say if you bought 3, it'd be like 3/10 of the normal gold contract. That gold contract is kind of heavy and it moves a lot. I mean, if you're right, we don't know if that's going to happen. Then obviously we would have wanted to be using the gold contract. But in this case, we don't ever know the future. And this is a good in-between way to do it. Of course, there are additional commission charges for each one you do. So if you did 3, it's like buying 3. There's more commission there. But it is less volatile, and this is one way to use this gold contract on a micro basis. So we could be looking at the MGC today if we can get a breakout above this level. Or we could also look at our other markets. If it starts to break down, we could take a downside trade too. It's just that the longer term trend is up on the markets. It doesn't really matter. I mean, you're playing that short-term move anyways. You can really kind of go either way. It's just kind of the rotation. I just haven't done a gold contract for a while. I wanted to do one if we could. Now, I'm going to show you how we would set this up, because we might need to set this up over here fairly quickly, as it does move fast, and we can actually get the trade in place too beforehand. And we can look at maybe a couple of contracts, possibly 2. We could take one off at the 50% level, and then also lift one up to take one off here if it does go in our favor. But let's go ahead and set this up right now. I'm going to use the drop down right here. Let's go ahead and adjust this to a 2 contract. We'll click over here. Under template, I'm going to do a couple of bracket orders right there so we can see what this looks like. And I'm going to start setting these up as we get into this, if it does break out above that level. Now, our tick right here, you can see up top here, 23. I can always click on the market, buy market if needs be, and get this going. But I have targets in here. Oh, geez, look at that. See, it just broke that. Wow, that was fast. Okay, well, that's the entry right there. Let me adjust this up higher real quick. 10, and we'll go 10 here. I'm just going to put it on because it did break above, and we can adjust it here in just a second. All right, folks, and you know what I just realized? I can only place this trade in my, I'm in the demo account, which is effectively a margin account. Give me just a second. I fill in for Ben, but I don't do it enough to remember always to do the paper. It's the paper money demo. We have 2 demos. Demo that I'm in is still effectively the demo account. But we talked through the trade, so we know at least what's going on. But I do want to get that set up here. Sorry, it's taking its time. So I've got to sign into that here in just a second. There we go. Okay. Yeah, we're waiting for that to pop up. And it's signing in, and boy, that was fast. So that's one of the reasons right there, though. You can have the trade in place before the move starts to begin, right? Because you can get these big spikes. Now, that was a surprising spike. Generally, you just don't see that. That was in the micro contract. But like I said, it can happen, and that's why you do it. Hang on. I'm still getting into it here. I got to select paper money. A little bit different scenario here. Okay, and as this is loading up, a quick note is, like I said, that 50% level, we could have taken a couple off there. It's already moved up so much, I probably can't even take the trade now that I got the paper money account in place. But there you go. And what was this trade all about? How did we set this up initially? We looked at the daily chart. We said there could be a rotation, perhaps, into the metals. The metals were holding up, and then we did this, folks. We just zoomed right into it and said, what's happening really short term, and what tools do we have to help us get on the right side of that trade? Well, pivot points are one way to do that. Um, hang on a second. I've got the paper money ready to go. Um, so let's see if we can get any other trades under our belt. But did we already hit a 50% target? That fast we did. I'm going to show you the 50 right now, right there. So yeah, you can see where the 50% comes in. I use Fibonacci's little trick to pull that up. It's a good quick way to line this up and say, yeah, sometimes traders will take half off the table right there. If we would have done two contracts, what would it look like right now? This is an estimate. Okay, it's not going to be exact because I don't want to spend all the time on it, but what does that look like? Just so you get a general idea, just two contracts of the E micro futures. So right there, I'm just eyeballing it. It's about 11.5 points. We had two contracts. So 11.5, we get 11.5. And remember what the contract size was? The contract size is um, 0.1. So we're just basically saying, 11.5. How many of those do we have within? Oh, sorry, I got on my other screen. I'm just saying, how many of those do we have within there? We've got 115 of those points. I should say, of those ticks that are moving a dollar. We had two of those, so I'm just going to multiply that by two, and that's $230 right there for two contracts at that point. Now, if we ran it up even higher, we know what that's going to be. Yeah, roughly, double that. So you're looking at about what? Close to 500, a little bit less for, let's see, about 480-ish, 470-ish, somewhere in there for that kind of a move. Now, it's totally different if we were to look at a halfway point, right? I just did my 11.5 points divided by, how many points are within there. There's 115. If I were to multiply that just with a single contract on the large gold, that's 1150 right there, just the halfway point. That's one contract, not two. Okay, so if you want to times it by two, you're roughly going to get 2,300 dollar move approximately on that main, just the GC contract, not the micro, but the main contract, just the GC. Just from that little move, folks, we're on a 5-minute chart. So it shows you how fast futures can move if you're on the right side. Of course, everything is all about trying to set up the right side of things. All right. Gold miners suddenly jumping. Yeah, and you'll see that a lot of times. In fact, there's been a lot of talk about the gold miners lagging a little bit, gold prices themselves. That was the trade. Dang it, we would have had that in if I'd had everything set up. But anyways, you saw how it did set up. So effectively, we did technically go through the process of putting that trade in right there. All right. So that is the gold move today. I wanted to go back though and look at our pivots, see how they're doing on our ES and NQ, if there's anything else we can look at. So still holding the center pivot point. Yeah, look at that. How about RTY? You look at that, bouncing off of it. So gold spiked, and these bounced off of that level. Now, the one concern I do have, I would just say this, any trader might have a concern, is that, we've been bouncing off this level a little bit, but notice we have not been able to really trend higher. We've been stuck in a range, and maybe there's a 50% level between the R1 and the pivot point, the main pivot right here, that somebody could look at trading back up to this level. Sorry, we missed it as we were looking at gold, but I was actually looking at the possibility of a rotation out of these and back into gold because we saw that volume profile on the daily chart, right? And that could influence these prices coming down. So we'll see. That's not too much of a bounce actually thus far, and it could still, potentially fade. We'll see. Quick note, I saw this in the comments, how to add those pivot points. Just go into your add indicators, come in over here and type in pivot. Pivot points. It is right there. Now the pivot points, by the way, I'll send out a tweet on this, show you how they're calculated, but they are based upon prior day's data. So what we had prior day is what we're seeing today. And then there's just adjustments for R1, R2, S1, S2. There's actually technically three, but we just basically use the first and second levels on each of these. Okay. I want to see how CL is doing. By the way, quick note, as we talked about this earlier, this would be where are your bars for the first 30 minutes? Right there is your high, and there's your low. Okay, so coming back to what trend we might see today, and this is what we haven't really broken higher yet, but 730, that's really the high here, and the high over this range is this level right there, and this is your low. So like I said, what some traders will do is they'll say, if we start to take out this high now, a lot of times, and this is our, institutional traders will do this too, not all of them, but they'll say, if you start to trend up here, it could mean that you'll end up positive on the day. If you trend lower, you could end up negative on the day. And that's what they say the probabilities are. But they'll base that upon the news, and then whatever direction you start off early with is oftentimes how you'll end with at the end of the day. Now that there's a lot that could factor into there. News flow. Oh my gosh, what do we have now? Tariff announcements all the time, and so recently it's been quite positive. You can see that on the daily chart, but just trying to give you guys a sense, of what you can expect during the day. At this time, it's tricky. There's just a lot of news flow in the market, and news flow is really determining what's happening out there. A lot. So those are your pivots. I will post those though to my X handle later today, to the calculation, so you get a better sense of it as well. I'm going to do this too, if you'd like. I can. This I've found to be helpful. This futures overview. Let me just go ahead and it's a grid. I'm going to share this with you guys so you have it. I'll put it in the chat if you want it. It'll just save you a little bit of time. There you go. Yeah, it's not much of a move. That's right. These are not big. You don't need big moves for big gains or conversely big losses. And that's where those micros can come in handy a bit too. Because you don't know, right? We just don't know. Moving over here to a shorter term time frame, I'm going to go ahead and take a look at SI silver. Silver's been lagging a little bit, but if the economy can pick up, silver is a metal that's used very, very frequently in the markets. I should say in the economy. There's a lot of use out of the actual metal itself. It's been lagging gold for sure, and it's got a little bit of a, as you can see over here, too, sort of you could call it a flag pattern here. And, there's a possibility of breaking out of this flag. And perhaps if that's the case, I'm teaching swing trading later today where we talk about flags. And maybe there are we can't talk about futures in that class, but we can talk about some of the miners. And I think some of the miners are setting up like this. You see that diagonal sloping trend line? If you break that line, sometimes you can get going higher out of the base. Let's just see what that 30-minute chart looks like, and you can see us actually making higher highs and higher lows here on silver. I'm going to jump right into the pivot points and see what we're doing on silver. Wow. Okay, so that really broke out of its base too, and it's actually showing some strength. So you can get pretty interesting ideas now. Here, folks, we did perhaps miss this one today. We didn't miss it. We did put the trade in. I was in the wrong, didn't have paper money, but we had the idea of putting that in on that break for the potential rotation. But remember, if that trend of gold or that trend of silver begins to unfold over a period of time, but this is just one day. And if we think by chance that it could start to rally back up here, that could be a number of days. And then what you could be doing with the trend reestablished, just as an idea that traders could do, right? We're talking about paper money here, of course, but this is just educational. As that move starts to unfold, what's the direction of the trend? It would be up, if that's what our expectation is, if that rotation occurs and we start to move up. Then when we look at this, we could look at it, somebody could look at it day to day and say, yeah, you're breaking above the R1 level. Target is R2. R2. So once you've established the trend, do you think that could have worked over here at all? Completely, folks. A ton of upward movement over here as well. So I wanted to leave you guys with that and highlight that, we want to look at big picture. We want to try to get a general sense of maybe what the direction is, and then maybe use some of that potential that futures has to move quite a bit, right, over a time frame. Of course, we talked about the micros, but to tie that in and say, if I'm just trying to highlight um, being right on the longer term and the shorter term. I've got an approach to use that. We talked about pivots today. There are other approaches. Of course, you can use price patterns too on a short-term basis, folks. All right, a lot of good comments today. Really appreciate those. I'm going to go back and take a look at those. And thank you, John, so much for your help in the chat. Really appreciate it, folks. That is what I had in store today, but keep an eye on that going forward. The potential rotation, just looking at those daily charts, that can be helpful. Always be mindful, too, that we do have those micro contracts that fit in there, /MES. There's the micro for the ES, and you can check those again by putting in that drop-down box right in here as well. And you can just confirm under the futures tab what those tick values are for each. All right. Well, hey, good to be with you all. And on that note, I'll look forward to future discussions, and we'll see you all next time.